Welcome back, everyone. Next up, we have Metallic Minerals Corp. It trades on the OTCQB under the symbol MMNGF and on the TSX under the symbol MMG, and is an exploration and development stage company focused on silver, gold, and copper in the high-grade Keno Hill and La Plata mining districts of North America. Please welcome as Chairman and CEO, Greg Johnson. Welcome, Greg.
Thanks a lot. Great to be here.
Yeah, we're excited to hear your presentation, so take it away, sir.
Great. Well, today we're going to be talking about metallic minerals. I'm Chairman and CEO Greg Johnson, and we're going to be talking about the metals, why mining, and why specifically this is a great time to be looking at the commodity sector. So metallic minerals is focused on the exploration and development in two key districts, the high-grade Keno Hill Silver District and the La Plata Silver and Copper District. So let's go ahead and dive in. We will be making forward-looking statements, and we suggest that investors take a look at our disclosure statements, particularly in our quarterly financials. Looking at metallic minerals, we are focused on both precious and base metals. Silver, gold, copper are our primary focus. This is a company that has been able to put together three significant assets over the last several years. The Keno Silver Project, one of our flagships in the historic high-grade Keno Silver District next to Hecla Mining. The La Plata Silver, Gold, Copper District down in the southwestern U.S., which is a high-grade historic producer. And as well, our Klondike Gold royalty portfolio, which is an area that's seen over 20 million ounces of historic gold production, and that we are fully permitted on to move towards production. In terms of key elements, we believe this is an excellent time to be looking at the commodity space, and we'll be talking more about that in the next couple of slides. You've got a team that has a track record of success, having built successful companies such as NovaGold and taken those from micro cap to over $1 billion market cap companies. We are backed by highly recognized exploration mining investors such as Eric Sprott, US Global, and others. We're well funded and have been able to successfully raise capital in this kind of market. And we're only working in low political risk jurisdictions in the US and Canada, in areas that have already demonstrated the potential and ability to really develop into economic and highly attractive assets. So taking a look at, high level, why mining, why now, or when should one look at it? What are some of the critical themes out there, such as critical minerals and precious metals, domestic supply, and then specifically looking at metallic minerals in terms of the team and the scale, in terms of, what would make this. So really stepping back for a second, I think a lot of people, they buy their products, whether it's their electronic gadgets or, even going to, the various elements that are just everyday life. And you really don't appreciate that everything that isn't grown as trees or agriculture is either mined or comes out of the ground in the form of petroleum. And so mining in particular is a really important part of the overall economy. And, this chart kind of highlights some of the, tremendous amounts of material that we use on a per capita basis, every day as North Americans. In terms of market timing, we are really at an exceptional period historically. If we look back over the last 100+ years in the cycle, and if we take an index such as the S&P Commodity Index divided by the Dow Jones, what you can see is that you go through these long cycles of elevated equity prices relative to commodity and elevated commodity prices relative to equity. And that we are in a period that is one of those rare periods in which commodities are extremely undervalued relative to the broader markets. And these have historically led to outperformance over coming decades when buying at these really low and attractive periods. So exceptional time in the commodity cycle to be looking at basic materials. And when you add to that the need for electrification, decarbonization of energy, which is going to shift away from petroleum, to metals to really produce that energy, this is an exceptional time fundamentally to be looking at these areas. So taking a look at an important element when investing in a mining company specifically, one needs to understand the various stages. The producing miners are very similar, if we use the analogy, to kind of the pharmaceutical biotech world, where you've got these large producers of a commodity that are very good at producing a product. In the mining space, they're very good at building large-scale mines, have the balance sheets and expertise to bring those into production. As we look earlier stage, similar to biotech, exploration companies go through a series of development stages. First is the discovery stage, when we're just starting to drill holes into something that has economic grades and concentrations of metal over widths that could be developed and put together in a significant body. As we advance through the engineering phases, what we call a preliminary economic assessment, pre-feasibility, feasibility, we tend to see the market value rise through the discovery period. Oftentimes, as people are trying to figure out how big the system's going to be, we may see that the values actually get ahead of themselves a bit. But effectively, you have, as you de-risk these assets towards feasibility, you see institutional investors come in, you see the valuations on a per ounce or per pound metric, enterprise value per ounce or pound, rise as you head towards feasibility. Basically, as a project moves from early stage, higher risk to de-risk and on the verge of turning into cash flow and production, you see values rise until you get to those producer valuations. And so in our sector, similar to pharmaceutical biotech, the large companies will start to take a look at things as they get into this engineering stage, and they like to buy things that investors have helped move during the higher risk phase at lower risk, but still pay a premium to that, because once it goes into their portfolio, they're going to get a full producer's valuation. So it's a really pretty straightforward kind of series of stages that any typical company would go through. And it's very helpful as an investor to understand, well, what stage is the company that I'm looking at? In the case of Metallic, we've posted our first resource. We're expecting to have a second, and we're expected to grow that first resource. And so we're at the early stages on this chart of basically developing a resource. This is one of the most rapid periods of growth for a company. And then as we continue forward, we'd be de-risking it through the engineering stages over the next 3 to 5 years. So this is a really helpful chart to understand value and potential and where the companies that you're looking at fall along that continuum. So looking specifically at our team, a critical element when looking at mining is understanding, does this team have the experience and expertise to be able to find and develop these assets? The team here at the Metallic group of companies, and Metallic Minerals specifically, we started out our careers with the major miners. We went on to form and found some of the companies such as Nova Gold and others, and have been credited with the discovery of numerous major discoveries in North America that have created billions of dollars in wealth. So we're looking to create that again, and we're recognized for our environmental sustainability and ESG by government awards for the projects that we've been involved in. So looking at the track record of discovery, I won't go into detail because of the short time we have today here, but effectively in our previous company, Nova Gold, who myself and others were the original co-founders, we acquired our assets at the bottom of the metal price cycle, so very similar to the last few years that we've been going through. These assets, we expanded them through exploration significantly and eventually into reserves, and they've subsequently been sold or monetized to major mining companies. So Donlin was the gold asset we picked up at the bottom of the metal price cycle, drove that from a micro-cap company to today a $3 billion market cap. Galore was the copper asset we picked up at the bottom of the copper market cycle. Again, massive expansion of that resource, and then sold that on to Teck and Newmont. And then our Ambler asset, Nova Gold, this got spun out into Trilogy Metals and is now partnered with South 32. And so today that trades, Trilogy's market cap is over 500 million. So tremendous value creation. So looking specifically at Metallic Group today, 4 assets acquired over the last 4 years in these 3 separate public companies, Metallic Minerals acquiring the other half of the Keno Silver District, which is now owned the western half by Hecla Mining. The model here is that this is a world-class silver district. Hecla knows world-class silver districts, having been involved both in Coeur d'Alene and in Alaska at the Greens Creek mine. So great location, great history, and we are successfully finding and discovering new deposits here. At Stillwater, sister company, Stillwater Critical Minerals, we acquired the Lower Stillwater complex and are looking at bulk tonnage, PGE and battery metal projects next door to one of the highest grade producers in the industry. At the Granite Creek's Carmex copper deposit, we are in a historic copper producing district with an operating mine to the north, and we are rapidly advancing that to exploration through the exploration stage and into the PEA stage. And then lastly, back to Metallic Minerals in 2019, we acquired our second asset, being the La Plata silver gold copper district that we have now tabled our first mineral inventory on, and would be a model similar to the Galore Creek asset that we developed for NovaGold. So we're going to do a quick dive into the projects themselves. We don't have a lot of time on this, but we would invite anyone who is curious, would like more information to reach out to us, and we can go through this in more detail. The metallic mineral holdings in the Yukon, including Keno Silver and our Klondike alluvials, are both in the central part of the district, highway accessible, grid power next door. So really all the elements that facilitate rapid development. If we look at the context of grade for mining companies, which is your concentration of metal, this is really a critical factor in terms of quality. Keno Silver is the highest grade silver district in the world. Now the operating mines are owned by Hecla next door, but it really stands out in terms of quality. This acquisition by Hecla, they already had 2 of the top 5 deposits in terms of grade, and now they have the 3rd and highest grade being the Keno Silver District. So really exceptional pedigree in terms of grade. This is the mill that was built in 2010 in the district, and a few highlights here for context. At 800 grams per ton silver grade, that's the metal concentration. This is the highest grade in the world. It's going to produce 4 to 5 million ounces of silver per year, which makes it a top 15 level global silver producer, and at a very low price at under $12 US an ounce, with current prices around 20. This is a very robust project, as you can see from the IRR. The acquisition by Hecla, which just closed here in the last month or so, very strategic. Hecla was already the largest silver producer in the United States. They're now going to be the largest silver producer in Canada with the Keno Hill Silver District. Having them come in with their strong balance sheet and multiple mines next door really means that this is going to become a flagship operation. And with us doing exploration on the green fields, the blue sky areas, it really gives us an excellent opportunity to be able to develop resources that potentially could be run through that central mill facility. So looking at a quick overview of the geology, these deposits in the Keno district, there are many of them. There's been over 40 major silver deposits discovered in the Keno district. They tend to fall in today's perspective. Most of the historic production was on the western end of the district, with some production on the east. Our land holdings are shown in the orange color. Hecla is shown in the green color here on this slide. But the geology continues to the east, and our recent discoveries are demonstrating the potential to be able to develop new resources that could go through the mill that sits in the center of the district. So looking quickly at the deposits, what you can see, most of the deposits occur, these red lines represent the surface mapping of the high-grade deposits themselves, and you can see that the yellow areas, which host most of these, continue and in fact widen on the eastern part where our ground is focused. So we see excellent potential in these areas to be able to develop similar deposits to what have been produced on the west. And in addition, some of our techniques, such as airborne geophysics and soil sampling, have mapped up kilometric scale systems that we're having great success in testing and have made a number of recent discoveries. In addition, we have another 6 new areas that we have are on the verge of resources and are rapidly advancing those. And our objective from this year's drilling is to be able to take those to initial resources. On the eastern part of the district in particular, it's been quite exciting to see, as this has come together, the scale of the silver in soil anomalies. So soil is weathered bedrock. So where you see elevated metal in the soil, that's a very good indicator. It's one of the things that we use in exploration as a tool. And when you start to see systems of the scale that we see in here, so the bright red colors represent areas that are kilometers in length and width at over anywhere from 6 to 100 grams per ton silver. Well, that's similar to the kind of silver concentrations that the largest open pit deposits in South America are producing from. So it's really quite exciting in terms of the potential here at Keno Silver for these size of systems. And the model that we're using here at Keno is one that basically is modeled after one of the largest deposits for silver in the world, called Penasquito down in Mexico. This is operated by Newmont Mines. Over 1 billion ounces of silver in 2 pits that are effectively related to deep intrusions that brought in the metal and the structure. And we see a similar type of geologic setting here on the east, where we believe that these intrusions may be the driver and the source for all of the metal that's been produced in this district, which is 200 million ounces of past production and over 100 million ounces of high-grade current resources. So exciting geologic model to be using to drive our exploration on this project. Really shows the type of scale and potential that we have here at Keno. So shifting gears to our La Plata project in the southwestern U.S. This sits in an area that's world-class in terms of its historic production, between 2 major continental scale structures that define 2 distinctive mineral belts. The Arizona copper belt down in Arizona, which continues to the northeast, and this copper belt that includes world-class deposits like Rio Tinto's being a canyon mine that goes to the northwest. So this crossing of these 2 major structural corridors really defines an area called the Colorado Mineral Belt, which has seen tremendous historic production. A number of major deposits being mined today. Newmont's Cripple Creek deposit and a couple of deposits, large-scale deposits being mined by Freeport. And then a series of historic vein districts, very similar to Keno Hill, that have seen high-grade silver and gold produced from them, but really relatively modest modern exploration. La Plata sits at the southwestern corner of this district, and it is one of those high-grade historic producing districts. Our work has quickly been able to build on work by Rio Tinto and Freeport historically, and to develop a first resource, which has taken us to approximately 1 billion pound copper resource as a starter deposit, and that includes 15 million ounces of silver. Our work this year was focused on drilling offset holes to expand this resource, and in addition, our exploration is demonstrating the potential to be able to find additional deposits that could have potential to be of the scale of this initial one or larger. So looking quickly at a kind of a cross-section or a slice through the earth to give you a sense of the district, what you're looking at in the center of this district is a large-scale porphyry system that was drilled by Rio Tinto and Freeport. Outboard from that are the vein systems that are related to this porphyry, shown here in the green lines and the red lines, where the high-grade silver and gold mining was happening from the 1800s to the early 1900s. There were 90 different mines in operations. After World War II, those small deposits were shut down during the war period, and that's when we saw Rio Tinto and Freeport come in and start exploring in terms of looking for the potential for a larger scale system. 56 drill holes have now been completed in this central resource area, and that has really led to the development of our first resource. So looking quickly at a cross-section through this area, so this is showing you our model. You can see the lines here that represent the drilling. The colored areas represent the grade shells, showing you the concentration of metals. Everything remains open. It's really only where we have drilling that the deposit has been modeled, and these arrows are showing that all of these areas remain to be explored to determine if the system gets larger. But porphyry systems are some of the largest hosts of copper and precious metal mineralization globally, and so the potential that the system is going to get much larger is excellent. In addition, we see the potential for additional centers. We see one here at Copper Hill to the west. There's another one just off the page, and we've identified 16 other targets that we're in the process of finalizing all of the information, but these look like they could be as large as the area that we started with this first resource. So lastly, I'll just touch briefly on the Alluvial Portfolio. Effectively, we have one of the largest unmined areas in the Klondike. We are licensing this out to experienced operators. It's fully permitted. So our hope is to be able to rapidly move to cash flow and production, taking a royalty from this on these shallow gold and gravel deposits that are mined in a bulk tonnage fashion by very experienced operators. So wrapping up, it's been an exciting couple of years for the company. As we've, in early years, we're all about acquisitions. Recent years been about drilling, making discoveries, posting our first resource estimate at La Plata. We're on the verge of a first resource at Keno. We've just wrapped up our drill programs, and so new exploration results will be coming soon, and then the modeling will start on those to look towards a first resource at Keno Silver in 2023 and an expanded resource at La Plata. So just quickly on the share capital, as we're running short on time, but we're 147 million shares outstanding. We trade in the 30-40 cents Canadian range on the TSX Venture. It's been a long period, a corrective period in the sector with the high in the silver, particularly August 2020. So it's been about a 2-year consolidation, but the uptrends are intact. And we believe that the beginnings for the next major bull market leg are in place. We trade very much like a silver company, paralleling the SILJ ETF. The company is really held up much better than many of our peers in this consolidation. We've been able to raise capital with the backing of successful investors such as Eric Sprott and US Global, and we're really well positioned. So in summary, exploration companies, the key that you want to look for as an investor is, do they have a potential world-class system, a system that a major mining company would be interested in? We actually have 2 of them in metallic minerals. We've got a technical team with the expertise and knowledge to how to advance those assets. And we've been able to acquire these assets, the low part of the metal price market, using our team's experience, consolidated these strategic land positions next door to some of the highest grade producers in our metal. We're rapidly developing resources and advancing these. We've got a pipeline of news to come ahead. All of these projects are in low political risk jurisdiction with excellent infrastructure, and we're only operating in low political risk jurisdictions, giving our investors not only excellent exposure to metal prices, but also exposure to the growth that will come through the growth of these resources and the de-risking of these resources towards production and cash flow. So with that quick summary, we can open it up to see if there are any questions.
Great job, Greg. We do have some questions for you. Let's begin. So is the goal or strategy to have a larger company buy you out, or will you build a mine? Is that possible that Hecla could or would buy or fund just that project somehow?
There's no question that, in our mining business, the bigger companies are always on the look for new up and coming growth ounces to put through their mills. So, Hecla is an obvious target with us being directly adjacent. There would be great synergies there. In the mining industry, we have kind of two areas of focus for people. There are the people that find and develop deposits, and there are those that put them into production. So we're set up right now as a group that does a great job of knowing where to look, developing ounces and growing those ounces, and then de-risking them towards development. For us to take them into production, we would need to grow the company, which we could do. But we often see that companies such as Metallic Minerals get taken out before they reach that stage, because the mining industry is an asset depleting industry. They have to replace those ounces they mine each year. So those bigger companies that are in production already are always on the hunt for something new that could be meaningful to their bottom line. So our focus right now is growing these world-class ounces, de-risking them, and we'll either look to partner or get taken out as we advance these over the next couple of years.
Great, thank you for that. With your placer mining operations, how much revenue would be possible at the highest end, and how big are these mining operations?
These are large-scale operators and large-scale projects. We've got over 20 miles of claims already. We've got 8 miles that are fully permitted. We're working with experienced operators. Potentially we could see something where our target initially is to try to get up to cover our administrative costs. So, something in the neighborhood of $1 million a year. But there's room here through this production that this could fully fund us in terms of our annual exploration budgets in the $2 to $4 million range. That's not beyond possibility. So we're still building on that. Our hope is this coming season, 2023, to see the first significant production. And it always helps to be self-funded to some degree or another. And this has a real advantage in these shallow deposits that they can be rapidly advanced at very low cost.
Can you talk about some of your ESG initiatives, including local community relations?
You bet. This is important in the mining sector. You need to have the buy-in and support from your local communities. Up in the Yukon, relatively sparsely populated. It's surprising. It's the landmass of California, but there's only 40,000 people that live there. So very large area, very prospective from a geologic point of view, not very many people. This really makes it ideal for mining. It's a low precipitation environment. So we work closely with our local communities, the local First Nations. We try to involve those folks at all stages of development. We've been awarded and recognized for our ESG in terms of our reclamation and stewardship. And it's a really important part of working successfully in the mining industry and not seeing undue delays on your project.
Can you also talk a little bit about sustainable mining, how important that is, and a little bit about any misperceptions that people may have about the industry?
I think the misperceptions on the industry, to start with the second question, really about history. And, back, if you look at the turn of the last century, mining companies came, they mined, and they left, and they often left it unreclaimed. Today, in North America, we have very stringent environmental standards to build a mine, how you're going to run the mine, how you're going to reclaim the mine. We have to produce drinking quality water, and we have to restore these areas. They really should look like there was never a mine there at the end, based on the current regulatory framework. So that's a perception that needs to be updated. Mining is a critical part of our economy. We need these raw materials. We can do it right. I always advocate the best place actually to mine is a place that has high environmental regulations, because it's going to be done right. And I think that's an important message to get out. These projects can be developed responsibly as long as you're putting them in places where there's support by the community and you can address the environmental needs such as water and recontouring the ground when you're finished. This is something that should be able to be sustainable, not necessarily in the individual deposit, but these deposits occur as clusters. So once you get the experience, the local expertise in a region, you develop the first mine, you mine it, you restore it, you go on to the next one, and the sustainability comes from that long-term supportive business and opportunity for communities with the high environmental standards.
Great. So important. Silver and copper are largely industrial metals. So where do you see them going if we're indeed headed towards a global recession or already there?
Yeah, I think that we see a very strong fundamental background right on this particular cycle. We're still have been in a bear market for the metals. So you have a situation where we have undersupply. We have a situation where the inventories are very low. So we may go through a period of a challenging global environment, but the metal supplies are not oversupplied. And when we look at things that governments are going to be investing in and the private sector is going to be investing in, such as decarbonization of energy, electrification, these are all things that are going to use metals. So we think that despite the potential for a global recession, metals such as silver and copper that are so important for solar panels and electrification and batteries are going to be really important. And as we come out of this global recession and governments are stimulating, metals are going to be an important part of that. and onshoring of production to secure energy, to secure products is going to be an important theme, we believe. And that's going to be really a large consumer of metals as well.
Robert Sinnott wants to know, when will the Keno Hill Maiden resource be complete and made public?
We're working right now to bring in the assays from the two programs, Keno Hill and La Plata. Our teams will take that data and they'll start to model it. If we've got a critical mass at Keno Hill, which we're hoping this year's drilling will get us, we'd be looking to deliver a first resource in the first half of 2023 for Keno Hill. And likewise with the drilling, which was expansion drilling at La Plata, we'd be looking in the first half of 2023 to develop and release an updated and expanded resource at La Plata.
Jim Colby wants to know, is the La Plata district activity focused on the development of pre-existing mines like Tomahawk, or is this a greenfield exploration?
Yeah, so the historic mines in the La Plata district were all high grade, focused on the silver and gold veins. At this point, we're focused on the bulk tonnage deposits, the silver and copper in the porphyry systems, which are much larger scale. We are going to have an additional focus this year on understanding the precious metals and potentially bringing those into the resource. But our focus is on larger scale, probably bulk tonnage underground mining of these systems at La Plata, much larger scale than what has been seen in the past in terms of production, but being underground, very modest in terms of the visual or other impacts.
Tim Nelson says that he sees your operational loss has decreased. You mentioned that you are well funded. So are you spending less because you now require less pre-production costs?
So in terms of funding, exploration companies, until we start to get to the point where we're actually producing revenue, we are always going to show losses in terms of those quarterly financials. But that's one of the objectives of the Alluvial royalty portfolio, is to actually bring in revenue for the company, with the potential, as I mentioned earlier, that could offset all of our costs for both running the company and for exploration if we're successful in developing to the degree that we hope we are able to.
Greg Banks wants you to talk about the infrastructure around your properties. What has to be put into that?
Yeah, infrastructure is a critical element for any mine. So at the Keno district, you've already got a mill that sits in the center of the district, road accessible. There is 4 megawatts of power on site. They're using about 1. So lots of extra capacity there, either looking at a mill expansion concept or a standalone. The total CapEx to bring the Keno Hill mine back online was around $20 million, so very modest. At La Plata, you've got road access, you've got a highway nearby, you've got power. So again, the key infrastructure in terms of being able to develop a mine is already there. Of course, you'd have to build the mine infrastructure itself, and we'll need to know more about the scale of the resource to understand that. But we're not in a remote greenfields location that will cost billions of dollars just to get to the front door for infrastructure, which is not uncommon in today's world where exploration companies are being forced to look further and further afield, often in areas that have no infrastructure at all.
Joe Padilla wants you to talk about which majors are producing around you. What are they producing? And is there an opportunity for a JV to reduce costs?
Yeah, so in the silver space, that Hecla is one of the top scale producers. As I said, they're the #1 in the US, soon #1 in Canada. So the opportunity definitely with Hecla next door is they're going to be looking at expansion. They're going to be looking to increase their mine life, which is only 8 years. You'd ideally like to see something that's more like 15 or 20 for that kind of operation. So great opportunity to partner. If we look at La Plata, we don't have a mine in the immediate direct, let's say, trucking distance as we are in Keno, but you've got Newmont, you've got Freeport, you've got Rio Tinto, all in the region that operate large-scale facilities, and in the case of Rio Tinto, operate a smelting complex that's rail distance from that project.
Fantastic. Last question from Tom Hernandez. What does your balance sheet look like today? Cash and assets versus debt?
Yeah, so 0 debt. I'm pleased to say that we've been successful at raising equity financing. The company management has always participated in that. We've had strong supporters. So we've been able to raise capital and not need to rely on debt, which is excellent, especially in challenging markets. In terms of where we're sitting today, we're around $4 million cash in the bank. We've very successfully been investing about $2 to $4 million a year in exploration over the last several years. So we can add a lot of value with that level of cash. So we're well positioned even going into 2023. If the markets improve, we may look at expansions now that we have 2 assets. So, we may look at some kind of capital raise, but we don't have anything in the near term in terms of that. And we're in good shape going into the next year.
Fantastic. Well, thank you so much for joining us. This is a thrilling time to be in your industry, and we appreciate all your efforts you're making. So please come back in the future and give us some updates.
Appreciate the time. Thanks for having us.
Thank you, Greg. Okay, everyone, stay with us. We're going to take a quick break, but we'll be back in just a second with our next presenter.